While the entire market is fixated on price during this crypto market crash, on-chain data for the XRPL suggests a February supply shock could be forming very quietly. And because of this, a potential decoupling from Bitcoin, a potential decoupling from Bitcoin. Why? Well, we've had this market crash, but real utility is the key, and we have the data to prove it. These are things that we have been tracking for months, and we're starting to see it play out. And I have the data and the receipts to prove it to you. So before we actually get into the on-chain data, we need to take a look at what's going on with Bitcoin, because it is important to paint this whole picture. Stick with me. So Bitcoin pulled all the way back to 59K yesterday. I have said I drew my line in the sand. I called my shot. I said I thought Bitcoin was going to fall to 55K. It got to 59, but I don't think this is over. I could be wrong. I hope I'm wrong, but I don't think the pain is over. When we look at the chart, we're actually in the inflection point. I mapped this out yesterday. I thought we would return back to this zone today between the last basically resistance level during the crash and yesterday's level before it fell. It's yesterday's all-time high. I figured we would come back into this zone and test, and that's exactly what we have done to this point. Now, when we look at XRP on the chart, we can see XRP's had a massive run. It's flipped its resistance, is now sitting above, basically waiting for confirmation from Bitcoin on what Bitcoin's going to do. This run up has basically brought it even as far as a decoupling or a divergence. It fell harder yesterday than Bitcoin did, obviously, but it's run up more today. So they're sitting even again. Now that Bitcoin and XRP are in an even playing field, this is why I think that a supply shock and a potential decoupling could start to form this month in February, because of data we've been tracking for months here on this channel that no one has talked about. And that was the account set activity. When we look at the account set activity, I've called this out for a long time. I know I'm only talking to 30 of you probably, and you 30 have heard it the entire time. So when we look at what's happening on Ledger, the account set activity has spiked over the last 3 months and has continued to maintain 40,000 per day. This is accounts getting set up on Ledger, right? Permissions, on and off ramps, basically data, getting them set up to go forth on the XRP ledger. I've been waiting for this to translate into payments activity. I've been calling it out. I want to see payments activity go over 2 million, maintain it, and continue to stay there and continue to climb to 2.5 million, 3 million, and so forth. That is showing real utility on chain, and that means that we should see some price appreciation in XRP. We should see some utility pressure from XRP. Well, what has happened today, folks? What's happened yesterday? Let's look at the payments. So since Christmas, it has run all the way up to now with its highest spike of 2.1 million yesterday. And we have maintained over 1.5 million since it's got there. Today, as of today, it's at 1.176 million. But, that's when I refreshed this at 8 a.m. this morning. Let's see what it's doing right now as of this very moment. When we refresh to get an exact total for today, we're currently at 1.6 million. We are going to go over 2 million again. How high will it go? I don't know. But payments activity is ramping up on Ledger. Interesting. That falls right in place with what Ripple just released on their own website yesterday. The institutional DeFi on XRPL, scaling real-world finance with XRP at the core. Just released yesterday amidst this entire crash, mind you, right? During the crash. Everyone was focused on the number, and this is what's coming out behind the scenes. XRP's utility is growing across payments, liquidity, and credit markets. New institutional grade features, MPT, permission domains, lending protocol, confidential transfers are scaling use cases for tokenized assets, FX, and on-chain credit. Live tools like credentials, token escrow, and batch transactions bring enterprise-grade compliance and automation to on-chain workflows. The foundation for the next generation of blockchain-based financial infrastructure is being built with XRP as its backbone. Not XRP Ledger, not RLUSD, with XRP as its backbone. And this is straight from Ripple's website, guys. This released yesterday. From feature set to financial infrastructure, the XRP Ledger has evolved into a high-performance blockchain for tokenized finance, with compliance tooling, real-time settlement, and asset layer programmability now live on mainnet. In parallel, XRP, the native digital asset powering the network, has seen a surge in both direct and indirect utility. The latest institutional DeFi update lays out how core features are being adopted, how XRP is used to facilitate key institutional workflows, and where the roadmap is heading next, with native on-chain privacy, permission markets, and institutional lending set to go live in the coming months. XRPL is positioning itself not just as a chain for tokenization, but as the end-to-end operating system for real-world finance. Let that sink in. Let this sink in for a second, guys. Ripple's coming out and confirming everything we've said that the thesis of XRP is. At the same time, payments are ramping up and the market is crashing. I hate to say that some of those, grandiose projections, I'm not going to say that those grandiose projections are going to come true, but it's lining up with some of those theories. I will be person enough to admit that, but will price follow the theory? I don't know. But the timing of this is eerie, to say the least. Excuse me. Exploring XRP utility across the ecosystem, at the heart of every institutional use case is XRP. Its impact spans both direct and indirect roles. The direct impact is underlined by new features that drive transaction volume and attract asset issuance to the XRPL, increasing demand for network resources and therefore XRP. The indirect impact we can also hone in on comes through XRP is used in base layer operations like reserve requirements, transaction fees, resulting in the burning of XRP, and bridging currency and FX and lending flows. Now, let's explore this across three institutional pillars of finance. So what this breakdown is they're explaining to you what the value of XRP is and how it's going to appreciate in value, right? So everyone who's been coming on and saying that XRP has no value or it's it's not going to ever appreciate, this is coming from Ripple, basically laying out XRP's use case in the new financial system with blockchain and DeFi, and saying how it's going to appreciate in value. So payments and FX. Fast, compliant, and liquid. XRPL's heritage in payments continues to mature with new infrastructure upgrades, including permission domains, a permission DEX, stablecoins on XRPL. So again, they're building out every single layer of it. So a permission DEX is, I believe, live now on the XRPL. The XRP impact, every transaction, particularly on the PDEX environments, burns XRP. These flows increase as stablecoins and FX corridors deepen on XRP ledger. XRP use case in DEX environments, XRP acts as the auto bridge. So the more they're using DEX, the more they're using XRP to bridge its liquidity. Again, we've said for months that we need assets to come on chain. This is exactly what XRP was designed to be used for, and they are confirming that it will be used as the liquidity bridge. FX and remittance transactions settling trades between stablecoins and other tokens instantly and with fee efficiency, because we do know that it's cheap to send XRP. I just sent 3,000 of it myself yesterday. It cost me 5 cents. Lovely thing to send XRP or use the XRP ledger. Unlocking balance sheets. So now we're on collateral and liquidity. Institutions exploring XRPL for collateral optimization and capital velocity supported by token escrow now works for IOUs and MPTs, enabling token-based conditional settlement, batch transactions, or multi-purpose tokens, right? Multi-purpose tokens, pretty much anything that's tokenized on the XRP ledger. MMFs, bonds, funds, diamonds are tokenized on the XRP ledger now. XRP's impact, MPTs, escrows, and settlement workflows increase network usage and require object reserves and transaction fees, all denominated in XRP. Use case, asset managers deploying tokenized money market funds or high-grade collateral use, XRPL, for issuance, escrow, and delivery versus payment, all involving the XRP at the protocol layer. Also in credit and financing. You guys are starting to get the idea here, right? XRP is at the center of liquidity on all of these elements, which are now finally starting to come on chain with the permission settlements, with the DEXs, right? Now, if you came in a little bit late, how did this start? Well, we will do a recap for everyone, but just to bring you in while I'm reading through this, because I can understand how this may be boring or stupid with no context. If you came in a little bit late, I'm just going to skip back to what we're seeing on the XRP ledger. If you've been in the stream for a while now, you know that I've been tracking account set activity. I've been the only one doing it. No one else. Don't know why. I thought it was important. Looks like I was right. When we track the account set activity, I've been waiting for that to translate into payments activity. I check it literally every day. Everyone in the stream can attest to that. But as it continues to increase, right, because account set activity, if you look at it, let me go back real quick for if you came in later and you're not understanding. Account set activity here has been spiked for the last 3 months at 40,000, which if you look at the entire history of the ledger combined, it eclipses that by probably tenfold minimum. Just rough guesstimate without doing numbers. But when you look at payments, it hadn't translated to payments activity. We're starting to see that now, right? We're over 2 million now. I want to see it continue past to 3 million, but we are seeing the information now coming from Ripple. And all of this information just came out during the crash yesterday. So everyone's distracted with number go down and Bitcoin crashing to 59K. Well, they came out with this basically reaffirming that XRP is going to be at the center of everything and how it's going to be at the center of everything. While payments activity is going up, while partnerships with things like Hyperliquid go live with Ripple Prime, now derivatives are plugged into the XRP ledger, right? That's why Hyperliquid's shooting up over the last couple days. So when we're looking at the XRP, this could not be more bullish from a utility standpoint. And I do think as these things come online, we are going to see a significant decline in available XRP once the world realizes what's happening with the actual utility on the ledger ramping up. And again, we'll hop back to that. We'll do a full recap for everyone because I also think this could play a part in decoupling from Bitcoin as we're looking at the price action right now. We may be on the brink of a divergence this month. And you guys know me, I am not a hopium or hype guy, but the things I've been tracking are lining up for me. So later this year, the XRPL 3.10 will introduce native on-ledger credit markets through the lending protocol. Single asset vaults, pool capital, and token-specific vaults with optional permissioning enables fixed term underwritten loans with repayment automation. Together these features comprise the XRPL lending protocol to facilitate fixed term, fixed rate credit on the XRP ledger. So lending, and remember, they still waiting on their bank license. First loss capital and off-chain underwriting add institutional grade protection. XRP and lending. XRP can be both borrowed and lent. It's also the default bridge asset in FX flows and settlement. So basically, the XRP is going to be their default liquidity bridge for every single settlement unless it's requested otherwise, but their default is XRP. So as activity grows on Ledger, we will see an increase in XRP usage, and therefore XRP needing to be held and locked up. And we're not We're talking trillions. I have more information about utility as we come into in regards to the Canton Network. I have a video for you guys that includes the CEO of Canton, has some really good insight just into how blockchain is building out in general. We're going to hop back into price here in a second, and I will be doing my live Q&A after I get through all the information, because the chat is my favorite thing. You guys keep the chat rolling, keep your questions going. I know that excuse me. I know that price took a dump yesterday, and it's starting to dump again, which is what we expected. Look at the sell volume. Oh my gosh, it's like literally right as I predicted it. Come on now. I hate being right sometimes. How low will this go? It's flipping EMA 9. Literally as we're talking, we're back under 69. I still think that Bitcoin can get to 55K. If it does get to 55K, then that opens us up to 80 cents, 85 cents for XRP. I mean, we'd be in full fear at that point. And I mean, everyone probably thinks I'm crazy because we just had such a massive run up today. This is about more geopolitical issues right now with price than it is about anything to do with crypto. I mean, it's a massive liquidity event. AI is in trouble, public or private credit's in trouble. Starting to see some cracks in the housing market now too. Like, I mean, it's brutal. I mean, this is a bad deal for the economy. And I think what we're seeing right now, this little rebound is a dead cat bounce. And I think we're about to see a liquidity sweep come in hot and heavy either today or over the weekend. But that's just me, not financial advice. I am not a financial advisor. You need to do your own research, speak to a financial advisor before making any investments. But that's what I'm seeing. Now, when we're looking at XRP and the utility and potential for a supply shock, we want to get back into that. We just talked about Ripple's blueprint for DeFi and institutional finance. I mean, I can still keep going with this, but let's skip down just a little bit. I think I've beaten a dead horse about how XRP is at the center and they're going to be using it, and they literally just confirmed it on their own website. You guys can go check out. You guys aren't even looking at it. You guys can go check out Ripple's website. And again, when I was talking about the price, if you guys didn't see it, let me hop back to price here. Bitcoin's falling right now. It's at 69. Bounced right off the zone, I thought. So I do think that we could get to a 80 cent XRP possibly. For sure $1 if it doesn't go that, if Bitcoin gets to 55K. But back to data. We like data. So payment activity is spiking. More to it though, right? Transaction activity. We talked about all that. Now, when we get back to the actual data, we talked about this, but now we're starting to see other people talk about the payments activity. They're a little behind though. This was released this morning talking about 1.88 million. They're reporting on what we saw not yesterday with the 2 million, but the day before with the 1.8 million. So the rest of the world is catching up to the utility. They're a little bit behind on it, but they're reporting on it as well. Now, when we're talking about utility, I want to show you guys this. It's a little bit of a longer video. Please bear with me because it's super important. This is with the CEO. This was an interview with the CEO of the Canton Network. Let me pull it up for you. Oh, by the way, Tether is now a super validator for Canton. Ripple in the XRP ledger with the DeFi blueprint that we just went over. But this is what I want you guys to watch. It's 30 minutes. But there's some really, really good information here. We don't have to watch the whole thing. I'll skip around to what I think the best parts are. I did retweet this out on X. You can follow me at LongView Crypto. And you can see all this information before it makes it to the stream.
But instead, Wall Street mostly ignored crypto. It was too public, too messy, and too risky. But quietly, over more than a decade, a different version of blockchain has been built, one designed for privacy, compliance, and actual institutions. Today, that system is set to move trillions of dollars on chain in the next couple of years with names like JP Morgan and DTCC already on board. Joining me today is Yuval Ruz, founder and CEO of Digital Asset, the parent company of the Canton Network, which is one of the only green tokens in the last couple of weeks, if you can believe it. And I've been so curious about what the heck is going on over there that we needed to have him on the show and explain to us what's going on behind the scenes. Today's episode is brought to you by Some Turn Crypto Tax Chaos into Confidence and Bridge send stablecoin payments
itself the last week or so. And maybe another one that is worth highlighting is Hyperliquid. And what's unique about the two things, which is I think that one of the things that I found very compelling when I got into this space a long time ago was this idea that crypto pitched itself as a way for everybody to own a piece of infrastructure that actually generates utility for the world. And the reality is that I think that, us as an industry have done a lot of great things in terms of proliferating the technology, explaining why this technology is important. But when you end up thinking about most of the tokens that have been launched or the ones that are already still in existence, not a lot of value gets accrued to the token holders. And, for us, one important thing, and we'll talk about how we did that, was to make sure that whatever success we have on Canton, whatever utility we drive on Canton, that value needs to mechanically flow down to the token holders. Now, I think that to your specific question about what is Canton, well, I think that the way I think about blockchain is the idea of blockchain is the ability to represent assets natively on chain. As a result of that, those assets have higher velocity. We talk a lot about, stable coins, the ability to move US dollars 24/7 in real time all over the world. That is velocity. Another component of blockchain that is critical is composability. It's the ability to embed and settle an asset against another asset atomically without any settlement risk, again, 24/7 real time. And those few things have got people really excited about crypto. The idea of asset mobility got people excited. I can now send value all over the world 24/7. The idea of composability, create a DeFi. I can pledge a token, get a loan. I can swap two assets on a DEX. Those are examples of composability. And when you end up thinking about that in the context of the real world, those are actually two really important problems to solve. As we know today in traditional system, you can't really move money as efficiently, although, you can stream movies, you could do a lot of things very sophisticated. It still seems that assets have some friction associated with them, especially when you start crossing borders. We use the term in financial services DVP or PVP, delivery versus payment, or payment versus payment. And inherently, people think about those terms as if those two things happen atomically. They never do, meaning there's always settlement risks, trade breaks, and things like that still happen in very large quantities in today's world. So those two features are extremely important. The problem is that one thing that crypto has neglected is privacy. So as we all know today, every account in crypto.
Privacy. So I'm going to add a couple things in here about XRP because they're similar, but they're different. They serve different roles, different functions, right? I hold both. Now, when we're talking about Canton Network, he's mentioning privacy. We just had those permissions done. Remember, DTCC chose to tokenize on Canton first, but not exclusively. So now that XRPL has its privacy permissions and its DEX and things to switch between, we could see movement from the DTCC onto the XRPL. I actually think that's going to be the next one. Me personally, not financial advice, but I want to throw that out as far as how it's kind of navigating behind the scenes with the privacy layer being so important. And I think that's why Canton was chosen first by the DTCC, but I think it's also why those permissions are so vitally important that just passed on the XRPL.
Is pseudo-anonymous. We can all kind of see. And when you actually look at some of the intelligence offering on crypto rails, they really know who holds what at any given point of time. I would say that the government agencies are some of the biggest users of said companies, and they really know, who does what at any given point of time. And as a result of that, when you end up, talking about, well, what would it take to get institutional adoption? When you end up, having the conversations with global treasurers, or treasurers of publicly traded companies, when you talk about different managers of different business functions, what you find out is they say, well, asset mobility or asset composability are really, really important things for us. But if that means that the rest of the world would know what we do from a financial perspective, no, thank you. We'll take the friction. So really, what we've done when we launched Canton, and we'll talk about some other things, was really the ability: how do I bring privacy on chain? And we should not mistake that for anonymity. So privacy to us is the ability for people that should know about a transaction to see the transaction, and those that shouldn't know about the transaction not to see it. And as a result of that, you said regulatory or compliant. If you have any kind of regulatory requirement to meet your compliance standards, you should be able to see kind of all the transactions that you were involved or should be able to monitor. So that's really at a high level one of the most important things we solved at Canton, but there's some other features that are not necessarily technical in nature.
Everything you're listening to today is also covered in our
If you build as the problem, and I say that too many times, but I will say it again, is that crypto takes a very narrow view of the world. And what I mean by that, it kind of says the world needs to look like this, and that's it. It doesn't allow for heterogeneous kind of approach, meaning the chain has one privacy model, one access model, and if you build a smart contract on it, you have to kind of figure out how to work within those constraints. And I think that if you were to take the radical side of the opposite, meaning everything is permissioned, everything is private, well, that's also not a good model. I give an example. A lot of times I talk about the NASDAQ tape, right? You see all the transactions that happen on NASDAQ and you go, wow, there's a lot that is happening here, but you don't know who's generating that activity. So there's a lot of value for what I would say permissionless information, where everybody should have access to that information. From an advertising perspective, from a credibility perspective, there's a lot of reasons why you would want certain things not to be private. And then there's a lot of things that where you would want them to be private. Like if I have PII, personal identifying information, well, I would probably want that to be private. If I do transaction on a stable coin, maybe I want the notional of those transactions to be public permissionless, meaning everybody should see, kind of like that NASDAQ example.
I'm going to skip over some of this privacy stuff real quick.
Have this kind of narrow view of the world. We actually think the world, the smart contract level. They would probably launch on other chains, but currently what they have communicated, this Canton is first. So is central securities depository. They run a clearinghouse, so they clear transactions. They worldview. It actually allows for quite a lot of customization at the smart contract level.
So when we see that there are names like JP Morgan and DTCC signing on to Canton, like what are they coming on to build exactly? Like what is DTCC's like plan, and which parts of it are they using? And like how does that work? Are they building a separate chain with Canton technology? Are they building directly on Canton? Just take us through that, like the onboarding process for these massive companies.
So just maybe for the sake of your audience, so DTCC is Central Securities Depository. They run a clearinghouse, so they clear transactions. They're also a registry they own a trust. And today they house roughly $100 trillion worth of assets, all the way from treasuries, US equities, US municipal bonds, and US corporate bonds. And they recently received a no action relief from the SEC to tokenize their assets, and they chose Canton as the first chain to launch on. I'm not, we don't have an exclusivity with them, and eventually they would probably launch on other chains, but currently what they have communicated, this Canton is first. So they are building on Canton. And really what they're doing is no different than how you should think about like a stable coin issuer. they're introducing an asset class which is currently housed on their legacy system. They're allowing that now to be represented on Canton. So if you wanted to, let's say, trade US treasuries against stable coins, now you could do that without having some kind of a wrapper, which is currently what you're seeing on most chains. Actually, the token would be the equivalent of holding a US treasury at the DTCC. Now you'll be able to hold it on Canton, and there's a whole slew of different applications that are coming to production, which will allow you to take advantage of the fact that you have, US treasuries and hopefully later on other asset classes.
Got it. So what we would see when we're seeing like the tokenization of something, let's say, actually, maybe you can disambiguate for this for me as well, because
Real quickly, that's basically just saying this is the very, 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 very beginning. This is the tip top of the iceberg in regards to value coming onto the Canton Network and honestly to other blockchains as well.
one of the big headlines last week, and this is very different than, somewhat different than the DTCC. One of the big headlines last week, as gold and silver popped off, is how hyperliquid, 2 or 3% of the volume on silver globally was on hyperliquid on like Thursday or Friday when it popped off and came back down. Is that asset just a tokenized version? Is that just a wrapper of silver? That is okay. So it's similar to what Canton would do in terms of like it's directly linked
No,
to the
no.
asset.
So
Just explain that. No, it's not.
Hyperliquid is a pure derivative. It's actually
Got it.
has no tying to the underlying.
Right.
Hyperliquid is very similar to a future contract. You're effectively predicting, gambling, however you want to put it. You're taking a directional trade,
Mhm.
saying where the price will be in the future. The reason why having tokenized underlying is very valuable even for derivatives is because when you trade derivatives, one of the things that you need, and Hyperliquid is currently only taking collateral in the form of cash, but generally speaking, when you trade derivatives, you need to pledge collateral. And in the world of collateral, usually you would have what you call initial margin, which is the initial amount that you post when you put the trade. And then there would be what you call variation margin. So as the asset moves in value from the point you put the trade, you would either receive variation margin if the trade went in your way, or you would give.
Really important to listen how he's explaining how the derivatives work, especially after what we just read about how XRP is going to work as liquidity in the XRP ledger for collateral. And Hyperliquid just partnered with Ripple Prime to bring that market now to the XRP ledger. So this is important as far as how it's going to impact XRP too, as we're learning about what Hyperliquid's doing here.
Additional variation margin in case the trade goes away from you. And a lot of times in traditional markets, and I think eventually will probably happen on Hyperliquid, you should be able to post the underlying asset as your initial collateral because it's actually it's perfectly correlated with the derivative. So imagine if you bought a perp on Bitcoin, a good collateral would be Bitcoin. Or if you did, ETH perps, it would be ETH. And if you did silver, it would be silver. The problem is that today there's no good mechanism to deliver these assets with the quality that you would expect. So now imagine if there were perps on US treasuries, you could actually deliver the underlying US treasuries as collateral against your, perps trading on US treasuries. And in the US, you could actually deliver US treasuries as collateral. And that's why actually having the underlying as in tokenized form is a very good use case and opportunity to make derivatives markets more efficient.
Crypto taxes are a nightmare. You've got trades across 15 exchanges, have the opportunity to participate. That's what you guys are doing, is essentially relaying it directly back to the asset. I guess maybe not as the collateral because it's not necessarily all loans, but that is the kind of the advantage of what Canton does, is that the assets are more or less legit in terms of not being some other form. It's directly
Correct.
tied to what the asset is. Right. Okay. Okay. Okay, that's helpful. I'm learning a lot here, so this is very helpful. There is one thing, actually, I wanted to ask you as well. What's the adoption look like on this, Yuval? What is like the speed? Because it does feel like at this point in time, especially the last couple weeks, the last couple months, as crypto chops, it does feel like we're really full steam ahead in terms of the TradFi coming on chain, right? And you guys are right at the forefront of it. We see in the headlines all the time. What does that actually look like in a year or two, right? Because right now, if we go and we look at the RWAs, what's actually on chain, there's Broadridge that's on.
Look at this dude. Remember the CEO of Canton Network over here. Look at his face as he's talking about this stuff. Like, just look at his body language. Look at his face. Look at his mannerisms. Like, he is giddy to talk about this.
Canton with like 100 billion, 200 billion, 300 billion assets. Clearly, JP Morgan, DTCC is something that's going to come down the pipeline. If I look back in a couple of years, are we looking 10 trillion assets on Canton? Are there 10 trillion assets on ETH? Like, what does that look like for you in the next couple of years?
I'm not going to speak for ETH, even though I have a lot of respect for it. I'll talk to what we are working on and what we can not necessarily control, but have more influence. So I think that a lot of times people also think that Canton came out of nowhere. It was a deliberate strategy, talking less, doing more. And then when the time is right to actually kind of lift the curtain, I think that again, this industry have done more talking than doing. It's not to overcast the doing, because there have been a lot of doing, but I would say that the amount of talking have been even greater. And that, at the end of the day, I always think of humans as we were relative creatures. We always measure the value of something relative to our expectations. So something could be actually quite impressive, but if I talked about it as if it's going to be 100x more impressive than what was actually delivered, you're like, it's actually not that great. And I think that we as a result of that, we started the company 11 years ago. We've been building quietly. Canton was launched as a fair launch 2 years ago, but we knew what was in the pipeline. We knew all of those relationships, all of these applications that we were building. And we waited for a point in time where we thought there's enough gravitational force here that we don't need to now come out and say, hey, let me talk. Like, I didn't want to have a podcast like this 2 years ago where I say, LG, I'm telling you, we built the best thing in the world and it's going to do X, Y, Z, and I have nothing to stand on. It's purely future tense. I much rather be able to talk about things in present tense or even past tense, and to say, you don't have to trust my word for it. Just go and talk to all of the people that are participating. So that's, first of all, it's not that Canton came out of nowhere. It's been deliberately taken to market in a way that it's better, in our opinion, to talk about things that are being done or have been done, rather than, again, making promises to the future. So that's just one anecdotal point. Where are we in a few years? I actually think that $10 trillion is too small of a number. And I'm not going to make necessarily a prediction, but try to explain to people, we do, like, not we, Broadridge, who deserve all the credit, do, anywhere between 300 to 400, even over $400 billion of repo every day. And in the crypto ecosystem, that seems like a very large number, right? To you, it also sounds, I assume, like a large number. It's a tiny number. It's a tiny number. I wouldn't say it's negligible, but it's tiny in the sense that on a daily volume perspective, repo trades about $10.5 trillion every single day, volume. So we don't even do 5% of it yet, right?
So again, tip top of the iceberg. Look at his, like, he looks like a little boy, like getting ready to open a present for Christmas. Like, I don't know, man. I'm glad I found this when I did. I think this is a lot of useful information just as far as a long view perspective on crypto. I mean, he basically just laid it out. Again, similar thesis for me with XRP, and I never thought there was going to be one winner, but they perform separate functions.
Oh, I think that what we're trying to reorient the crypto community to understand that billions is not the right measurement. The DTCC process is quadrillions. a year. 10 trillion, I think, is just not enough. So I think we're going to see a much higher number than that.
Got it. Okay, that makes sense. While we're on that topic, I do want to bring up this is the main kind of chart I was looking at when I was learning more about you guys. Is just going to rwa.com or .xyz and looking at the actual like total tokenized assets, right? And or which networks have the most tokenized assets, right? So you guys are way ahead of anybody else here, and most of that is from this Broadridge
One use
company.
case.
One use case, exactly. You guys only have one, I guess. I don't know if you call them clients or partners or just people using the chain, but there's only one on here. And the other day, this number was at 300 billion. So I'm assuming, obviously, as repo loans, they kind of fluctuate. Maybe you can tell me really quick, Yuval, as clearly this is kind of like the first ones to show up. What exactly does Broadridge do, and what is this repo stuff that is on chain? What are their repos?
Sure.
Just explain that for us so I understand.
Yeah. So first of all, one of the challenges with privacy is that you have to convince your partners that it's a good thing to disclose what they do and what is their activity. That's the negative thing about privacy.
Yeah.
So Broadridge was the first, and I think you're going to see more players start actually showcasing the numbers of their volume and activity and what exactly they do. Specifically, Broadridge, for those that don't know, Broadridge is a publicly traded company. I don't know if their valuation is somewhere between $30 to $40 billion, if I'm not mistaken. They have two sides of the business. One is what you would call the market side, one you would call investor communications. If you ever received an envelope to do a proxy vote or some investor communication, it's north of 90% chance that Broadridge have delivered that to you. So that's a big part of their business. And then the second part of their business is in the markets, they actually run a lot of the fixed income back office, middle office for a lot of the financial players. It's a very large number. North of 50% of the U.S. market from the broker side runs through Broadridge. So that's who Broadridge is. And Broadridge has been one of the super validators. They've been supporting the network from day one. They sit on the board of the foundation. And one of the things that they wanted to solve is the ability, again, of collateral movements. So similar to stablecoin movements, collateral movements, and make that more efficient. Now, repo is just a specific financial product that is used a lot of times to finance your balance sheet. So there are all kinds of requirements by regulators all over the world, how much cash you need to have on your balance sheet at any given point of time based on the size of your balance sheet, the size of your positions, all kinds of rules. After the financial crisis, it's called the Basel III. There's, uninteresting thing. But at the end of the day, the way you do repo is you say to your counterparty, hey, listen, I need some cash right now. What I'll do is I'll give you some US treasuries and I'll borrow the cash. And there's kind of like, think about it as a super short-term loan. It's usually overnight and it could be then extended. And you could do that internally, meaning between your legal entities. So if you have the UK legal entity and the US legal entity, the US legal entity needs more cash, so it will borrow cash from the UK entity and will give them treasuries and vice versa. And you could also do it across counterparties. So bank A to bank B. And like I said, that product does about $10.5 trillion notional every single day. So what Broadridge did is they said, well, if we tokenize US treasuries, we can actually, so specifically out of that 10.5 trillion, again, give or take 5 to 5.5 trillion is.
Okay, so you know how it works now, but the question is, well, how does the coin make money? Well, they answer that too. Let me find it for you. I'm going to skip ahead to that part if I can find it where they go over the tokenomics of how it actually makes money. Let me see if I can find it. See if this is it.
And it's all only value, right? It doesn't have more value other than blood, sweat, and equity into the network rather than money. And I actually think that the effort of people
here we go. Okay, this is close to
into an ICO, We do the fair launch.
Here we go.
And really, there are three types of players that can participate in the Canton ecosystem. We call them the super validators, the validators, and the apps. And the super validators are kind of, think about them like the full nodes. They run the consensus on Canton. Again, you cannot buy your way into being a super validator. You have to contribute value to the network. So anybody, LG, you could be a super validator if you write a compelling enough proposal to the list of, I think now it's 40 plus super validators, on why you can add tremendous amount of value to the network. So if you believe that you could do that, write a proposal, submit it. If 2/3 of the super validators vote in favor, you're a super validator. You run consensus, and there's all kinds of slashing if you don't perform your task. But at the end of the day, we felt that that's actually a much more fair access than just pledging money. And it's actually much more valuable to the network than just staking. Because at the end of the day, every super validator have contributed blood, sweat, and equity into the network rather than money. And I actually think that the effort of people in today's world, when everybody's busy all over the place, is much more valuable than just money. A lot of people have money. At the end of the day, we need to build utility. And build a utility requires a lot of third parties to actually do things. But that being said, I think that on Canton, the infrastructure provider, those that run the consensus, actually get the smallest part of the economics. And the reason is that because, again, we view that at the end of the day, those that generate value for the network are the applications and the users. Meaning I could have built the best technology on earth. Like, let's just say, objectively speaking, if we could actually decide this is the best technology in the world, but if I haven't convinced people to build on it and use it, it's worthless. Right? Put it in a museum of some science and technology, and that's its only value, right? It doesn't have more value other than that. And I think that there is a lot of L1s that fit that category. Impressive technology, haven't done a good go-to-market, and therefore don't have any usage. So, so for us, most of the economics go to the applications and the users by generating fees. And what does that mean? So there is a mint schedule. And the mint schedule allocates a portion of the mint to the super validator, a portion of the mint to the validators, and a portion of the mint to the apps, where the validators and the apps get the lion's share, 80% of the economics. Now, how do you calculate who gets what? And the design is by burning tokens. So anytime you want to participate on Canton, you have to burn tokens. You have to make tokens pulled out of circulation. And the idea is that if utility exceeds, inflation, then the token supply goes down. And if the token supply goes down, generally speaking, you would assume that the price goes up.
So as utility increases, more tokens are burned and the price will go up. He just talked about how they already are doing billions and they're expecting to do trillions, if not quadrillions, and like tip top of the iceberg. So we're getting an idea of how they expect this token to appreciate in value, and he's painting a very clear picture of what he believes is about to happen.
There's nothing that mandates it, but at least there's some kind of like a logical mechanism that says, if you keep on driving utility through the network, meaning the actual dollar fees on the network keeps on going up over time, you should assume that more and more tokens are being burned. If more and more tokens are being burned, less tokens in circulation, right? You should expect the price to go up. If the utility on the network does not exceed inflation, right, you would assume that eventually over time, this would be inflationary. And when things are inflationary, you expect prices to just go down. And that's why I think that, Canton is probably the only one out there that have created a mechanical way of saying, if we're successful in go-to-market, this doesn't have to be a purely speculative asset. It should actually have some, fundamentals associated with it, whether it's a discount cash flow model with some kind of a multiple that would put some kind of evaluation on the network. And a lot of people today talk about token buybacks and things like that. I actually think that having something mechanical built in is a healthier thing, because again, I think of token buybacks as more of an intervention that is not programmatic. It's kind of like, oh, bad news, people don't like us. Okay, let's announce a dividend, which is the equivalent of a token buyback, right?
Yeah.
Hey, let's please the people right now. And then once they're pleased, we don't have to do it again. So we think that actually having something mechanical built into the protocol is much more valuable than, again, a non-programmatic thing to do.
Got it. So then how does revenue work for you guys then?
So the revenue is really, again, it's the fees that you have to burn on the network. So if you want to participate, you have, for every transaction on the network, you have to burn fees. And the fees are denominated in US dollar. Again, you asked about TradFi. The fees are denominated in US dollar, meaning the same transaction is always going to cost you the same in US dollars. If the coin is now 10x higher, then you just burn 10x less coins, because you always pay the same amount in US dollar.
Right.
And therefore, if the coin just pumps without utility catching up, then you're actually burning less and less coins, because utility stayed the same. And then you expect at some point this will correct, because it kind of got disconnected from fundamentals too much.
So is this designed to basically reduce volatility and for the token to directly reflect the activity on the network? Like, is that kind of what you're explaining to me, to kind of summarize it? I'm trying to wrap my head around it.
I think the latter is correct. There should be a much stronger relationship, which is what I was saying, between the value of the network and activity on the network. Volatility, I'm not, because again, at the end of the day, the price can disconnect from fundamentals, but there is now a built-in function that will say at some point fundamentals will kick back in, because you're going to have.
Okay, that's pretty much it. Thanks for sticking with me through that. Let me see how many people are in the stream. I should have looked. I didn't even check to see if you guys wanted to catch up with that piece of it, but I thought it was really important because it shed a lot of light on the rest of the crypto market as a whole, and the rest of tokenomics as a whole, and kind of an idea of where traditional finance is wanting to go with crypto. And we can see where they're wanting to go by what they're backing. And then when we talk about what's happening with XRP and everything just announced with the DeFi blueprint, we're starting to see how these particular, institutional chains or these banker coins are going to have their utility and have their price appreciation. It's getting laid out clear as day. And if you came in late, I'll do a recap. But again, the whole premise of this was that a new supply shock opportunity is available for XRP, and not just XRP, but also Canton Network. And it highlights both, they both highlight each other as far as the stories that they're telling us. Now, when we're looking at Hyperliquid coming on to XRPL and everything they're discussing about collateral, and again, if I'm not going to reread this whole thing, it was quite the long read, but it's straight from Ripple on Ripple's website. They released their institutional DeFi on XRPL, basically the blueprint of how XRP is going to be used at scale. They released that yesterday during the crypto market crash. And at the same time, payments activity is now spiking over 2 million and continuing. It's already today at 1.6, almost 1.7 million. So we're going to have another day over 2 million. I want to see this continue to climb over 3 million and beyond. And when we're talking about everything that's happened over the last 3 months with the MAS licensing, with the EU licensing, with the UK licensing, the partnerships in Japan, tokenization in Japan, and then the most recent one with Hyperliquid coming with Ripple Prime, right? Ripple Prime offering the prime brokerage to people. I mean, when you combine the two fields, we should have a good understanding of what's about to come on chain over the next 5 years and how early we still are. And now we have a good layout of how our, at least Canton Network or our CC and our XRP are going to appreciate. Now, I said there could be a potential decoupling from Bitcoin. I still think Bitcoin's going to go down from here. I still think 55K is on the table, and it's not because of Bitcoin or it's not because of crypto. It's just because of the overall economy right now. The risk off rotation is clear. Now, I mapped out Bitcoin yesterday after the crash, shortly after the MicroStrategy call. And I figured it would run right up between this area where we had our first, basic resistance when it tried to run up again, and the all-time or the high from yesterday. And it ran right up into that area, pretty much dead middle, and fell below it. So will it continue to fall? I think so. But this is why we dollar cost average in. We're here for the long view. What prices are going to be 5 years from now, 10 years from now. I hold XRP, Canton Network, HBAR, Chainlink, and Ondo. But for the time being, everything follows Bitcoin. So when we're trying to get an idea of prices, that's what we got to do. So right now, XRP is falling back to $1.45, and I think it's still waiting to see what Bitcoin's going to do right now. But nothing but bullish news across the board as far as utility goes. And as this continues to turn on, the demand for XRP will increase. And the same thing with Canton Network. Utility, I think, is about to shine as these payments increase for XRP Ledger. Again, my opinion, not financial advice. Let's hop into the chat and talk to everybody in the chat here. See what's going on with everybody. Apologize for the longer video, but it had a lot of really, really good information in there that I thought was worth sharing. Let's see what everyone is doing. Why is this not working? See what everyone's doing today. This is the one I'm looking for. There we go. All right, back to the top. Crypto Roger first in the house today, followed by Sir Charles. The first program we learned to write outputs. Hello, Roger. LongView crew. I like that. The LongView crew. That works out. It's still got the LVC too. So the LongView crew. All right. And don't worry if you came in late. I will do another recap for everyone here in a little bit. But let me get through some of this chat for you guys. All right. So Raul's in the house. Audio's good. That's fantastic. All right. Man, I'm still waiting to pull the trigger at $1 XRP. I think we could get there. Again, this is kind of my target range here. We got to $1.14 and 59K last night. I still think this leg is on the table. We'll see what happens, but this is where we got last night. 59K and $1.14. So we were pretty darn close to these levels. Korea stepped in big with some buying last night, but right now, everything's kind of waiting on Bitcoin to decide, as we just looked at, The pain is over now, it seems. I don't think so. I hope I'm wrong, but I don't think so. God, Charles, Roger, Raul, and everyone else. Hello, Todd. Welcome, welcome. Do you think XRP will retrace as well? Need to add to my long-term bag. Again, not financial advice. It's never financial advice. I am not a financial advisor, but I've clearly stated where I think this is going to go. I think we see $1. I think we could see as low as 80 cents. I'm waiting to see where it's at when Bitcoin hits 55K, but that was kind of my projected model that I put out a couple days ago, and I've been tracking it all the way down. Raul says, let it drop. Amazingly, despite the crash, I lost 0 crypto. The sky is blue. I am still here. Well, yeah, you only lose the crypto if you sell it, right? So as long as you don't sell it, you didn't lose. Only if it's a realized loss. I was actually thinking about, though, for tax purposes, I was thinking about selling some of my XRP and then rebuying at the bottom so I have the negative on my taxes this year. Because I would be at a loss because my current average buy rate's $1.76. So I was thinking about that, but I decided not to. Just warming the tire, says Race Fan. Good day to you too, Daniel. Appreciate you guys for being here. And again, thank you to everyone for taking your time to be here. I always say your time's your most valuable commodity. So the fact you spend it here with me, I really, really do appreciate. Be sure to hit the like button, subscribe for the long view, not for pump and dump hopium. All right, Sir Charles, yes. And happy Friday to everybody. XRP going lower. Watch for the Sunday night dip. Again, I believe it is going to go to 80 cents. But again, we'll see where Bitcoin is at 55K. That's what I'm thinking. But Mr. Giant says it's still coupled with Bitcoin until it decouples. Nothing will happen with the price of XRP. Well, I think that might be sooner rather than later, the way things are shaping up, at least with ledger activity. But that's why I'm following it, right? You called the 60K bottom. Remember, I said Bitcoin hits half its all-time high. All right, you did call 60K. It got to 59. When it started going down, I thought 55 was where we were going to go. Y'all click the like button. I appreciate that. Yes, hit the like button. Help the stream grow. Grow it far and wide. The stream has been growing, though. A lot of people like the MicroStrategy call. A lot of people like the Ondo Summit. A lot of people are liking those longer streams where we're getting the real information. I try to bring the real information without hype. And a lot of times, unless people see it directly from someone else's mouth, they don't want to believe you. Even if you do give them links or, news articles and things like that. When people say supply shock, does it mean 2 or 3 digits? Well, supply shock can mean anything you want it to mean. I'm not attaching a price to it. But what I'm showing is that real utility is ramping up extremely fast now. We're starting to see it. And then, of course, Ripple announces that blueprint on exactly how XRP is going to be used in the center of everything. It's hard to think that transactions on Ledger aren't going to skyrocket once this starts rolling out and more force, especially now that they have the privacy layers going. Like, think of what just happened for Canton Network and how their coin has been steadily increasing during this crash. Even it's like one of the only ones that's green for the month or for the last 30 days or whatever you want to look at. Them and Hyperliquid, because of the real utility and the real use case that's actually taking place. And now Hyperliquid's partnered with Ripple Prime. So I mean, I can't give you a number, but to me, my thesis is number go up, whatever it may go up to. That's why we dollar cost average in and buy for the long view, not trying to time tops and bottoms. Scream the Supreme Court about to hear learning resources versus Trump, which could invalidate most of the tariff structure. That could be another potential issue that could push it down as well. But I actually stopped talking about the damn tariffs because they pushed it back 3 times on me now every time I bring it up. So I just stopped. Could we see a big risk on rally if geopolitical fears unwind? Potentially. But I don't think we would see a big risk on rally. So what are the indicators for a risk on rally when it comes to economics? 0% interest rates means we're pumping money, but that's not enough usually. That's the start. That's like the beginning. But if you look back to like 2008, 2009, they cut interest rates down to 0, but the stock market didn't bottom out until like 6 months later. So it really didn't start kicking on until they really turned on the money printer with quantitative easing. And I think that's what a lot of this rotation is right now. People are getting out of stocks, gold and silver, my debasement plays because of Kevin Warsh, right? Was nominated for the Fed chair, who is pro crypto, but he's typically hawkish when it comes to turning on the money printer. Now, I think he'll have to turn it on eventually. He'll get enough pressure from the administration to do it. But typically, in a deflationary element, people are trying to get out of debt. They're trying to get out of leverage. So that's why we're seeing a lot of this stuff unwind, I think. So I don't think we really start seeing a shift in the economy so much until the money printer gets turned back on. So we really start seeing quantitative easing. And I know that I just got really dry, like macroeconomic stuff with you there. And that's why I'm kind of bearish right now. I'm not bearish as far as my long-term view on my crypto. I'm just bearish on the stock market right now and what that means for risk on assets, if that makes any kind of sense. Waiting to see utilities start to drive a wedge. Dow now hitting 50K. Things should pick up in a few months with midterm elections rolling in. We can hope. And again, I would love to be wrong. I've been talking way too much about AI bubbles and doom and gloom, and now I'm talking about deleveraging. But when you look at the pullback in gold and silver, and when you look at the pullback in stocks, it's across the board, which is making me concerned. XRP is required at the protocol layer for payments, collateral, and lending. Evernorth is calling it a multi-billion-dollar yield opportunity. Well, we just saw the article from Ripple, and I am going to do a recap without playing the whole video. I did retweet that video from the CEO of Canton. I suggest you guys take a look at it. It has a lot of good information just about blockchain in general and how the kind of the macroeconomic, larger financial tools work behind the scenes. Time frame made him smile huge. Yeah, and when we were looking, like, he was answering some questions, you could just see his whole body language change. Like, he is super, super giddy about it. Todd getting a run in. Good for you, Todd. Canton is still so new to me. Thanks for the introduction. Under 20 cents, but does it have potential to reach XRP value possibly? Well, we saw how the tokenomics work out and how early it is in the tip of the iceberg. I do think, because in the last, since January 1st to now, it went from 23 in market cap to 15 in market cap. Or actually, it got as high up as 14. I didn't check it today, but it got as high up as 14 because its utility has kept it steady and increasing as the market crashes, because there wasn't as much money in it. It went from a 5 billion market cap to a 37 billion market cap in like a month. So, I mean, it's growing rapidly. I do think it can reach, and you heard them say at some point it will become inflationary, and it's designed to balance out. But as utility ramps up, I think it's a great time to own Canton. And that's why I own it. That's why I got in on it at the beginning of the month when I started learning about this stuff. But no one wanted to watch it. No one wanted to talk about it. I'm one of the few people talking about it on YouTube, I feel like. Now, there's some people out there. But I think it's a very strong play moving forward. Not financial advice. You need to do your own research. Never buy anything just because I say I like it. But that's why I try to present the information to you guys and let you make up your own mind. You're smart people. You don't need me to tell you that. I've been wrong on here. I try to give you guys the information, let you make up your own mind. Where can you buy Canton? It's on several exchanges. It's on Uphold. It's on Kraken. It's on Mex. It's on a couple others. But the thing is with Canton, note when you're buying Canton, when you're buying Canton, you're not going to be able to transfer it off the exchanges to a cold storage wallet or a warm wallet or anything like that. You're going to have to leave it in custody on the exchange. And that's why I specifically buy that through a brokerage, because I can leave it in institutional custody, because I can't move it off of an exchange and custody it myself. So I use Caleb and Brown, who I partner with. I have their link in the description for you. You don't have to use them, but that's who I use, so I can keep it in an institutional cold storage custody as opposed to in custody of the exchange. So that's just me, but that's where I get it. You'll try to catch up. Okay. M. Casimo has to have a long video for a long view, brother. Well, I want to make sure I get as, best information I can out there. What are the chances this is manipulation so BlackRock can get in because they know the Clarity Act is in the bag? I think 0. Honestly, I mean, BlackRock, they control a third of the world's money. They can do whatever they want to do. If they wanted to get in, they would have got in. My opinion. I mean, BlackRock just lost a ton. Well, I mean, BlackRock didn't lose it, but their ETF shareholders lost a ton of money on Bitcoin recently. Be careful selling XRP, supply shock incoming. When I made the statement, I was thinking about selling it and buying back in. I was literally talking about sell at $1.20, buy at $1.20, like immediate. But by logging the sale, because I bought it at $1.76 or whatever my average buy is, it creates a taxable event, which would be at a loss, which means when I do my taxes at the end of the year, I have a net loss. So say, for instance, I sell it right now at a loss and then rebuy at $1.20, I still have the same, or whatever the price is, I still have the same amount of XRP, right? It didn't change, but I logged a loss on my taxes. Now, if I don't plan on selling it as it appreciates down the field, like that's how you just take advantage of taxes, as far as just selling it and rebuying it immediately. But that's just me. I think you mean, leering resources. Okay. Would you add a 6-pillar EVM sidechain for like Axelar, since it's essentially a building block with a DeFi blueprint? Axelar, I do hold a little bit of Axelar as one of my dart throws. I mean, I'm trying not to build out the pillars too much. Like, I'm really interested in Hyperliquid right now. I have not bought any of it yet, but I have a lot of interest in that, considering its partnerships and what it's doing with Canton and XRP. So, I mean, there's a lot of good projects out there right now with a lot of use case potential. But I try to stay committed to the ones that I think have the best use case and the best ROI. I mean, Ondo's leading tokenization right now. That's clear as day. So Ondo's leading tokenization right now. HBAR's leading in tokenization as well. Canton and XRPL are leading in infrastructure based as far as finance goes. As far as I'm concerned, Chainlink's all over smart contracts. So I haven't found anything to kick out, and I don't want to grow it too big. So no, I don't think I want to add a 6 pillar. I think I'll just stick to my 5 pillars and my dart throws. I think is more realistic. Did you ever get into electro culture when you were growing? No, I did not. I did not get into electro culture. I stuck pretty much with, actually, to tell you the truth, I don't even know what you're talking about as far as electro culture. That sounds like a conversation for a members only live stream, though, Crypto Roger. We can bring that up on Wednesday nights. Members only live stream Wednesday nights. That's where we were talking about this Bitcoin crash, literally the day before it happened, unfortunately. Do I have Hyperliquid? What is the symbol? I currently don't hold any Hyperliquid. The symbol is HYPE, HYPE. It's available pretty much everywhere. Any video in the near future about Hyperliquid? I may. I'm still getting through my 5 core pillars, so I still have to do HBAR and I still have to do HBAR because I've done enough XRP stuff. But I've done Canton, I've done Ondo. Oh, I still need to do HBAR and Chainlink are the 2 I need to do. But then I might start moving into the dart throws from there. Absolutely. I like Hyperliquid. I think it's great. But I just haven't, I can't kick something out of my core 5 yet. I just don't feel that confident in it. You know what I mean? It's still fresh. It's still new. So recap for anyone who came in late. Let me see how many people are in the stream right now. Down to 28. So quick recap for anyone who came in late, and then we'll call it. We're already well over an hour. And any other last minute questions, thoughts, or concerns, you might want to get those in now as well before we end things up, because I will double check the chat as soon as I get through here. So quick recap for those of you who came in late. How can we potentially have a February supply shock for XRP? Well, the thing we've been tracking at length is account set activity, and it's maintained. Most of you know this by now. We've started to see the increase in payments. Yesterday, we finally peaked over 2 million, and today we're already at 1.6 million. So we're going to see over 2 million again. This correlates perfectly with what Ripple just announced. I'm not going to read the whole thing in the recap, so if you caught it late, you can go straight to Ripple's website and look at this. It's the institutional DeFi on XRPL scaling real-world finance with XRP at the core. They go down to break through everything, how XRP is going to be utilized in every single layer of their DeFi protocols on blockchain, from payments and FX to collateral and liquidity to credit and financing. They just partnered with Hyperliquid. They just announced a partnership with Hyperliquid either yesterday or the day before with Ripple Prime. Okay, payments activity is starting to turn on at scale. Everyone else is late to catching up. They're still reporting on 1.88 million in payments when we're already surpassed 2 million and growing. Sorry, we track it every single day. I stream Monday through Saturday at noon every single day. We cover the news, we cover the price, because we need to know where we are so we know where we're going, because we're about the long view. What price is going to be 5 years from now, 10 years from now. And I will see you guys at the next one at noon tomorrow. I don't have any new chats to end the stream. So with that, we will, I'll continue to dollar cost average in, and I will talk to you guys on next video. Later.